Hello, this is Pat Walker at MissionWinners.com. It is Thursday afternoon, and many of you know this, but some don't. I am an IBD Meetup co-leader, and I have been for 10 years in St. Louis. I work with a good friend of mine, Michael, and I enjoy teaching people about investing. I've been doing it since 1986 and been through the crash of 87 and everything in between. And I'm a student of the markets. I love it. I love to learn about it. I love to study it and then hopefully help other people. That's part of the reason why we're here. If we can't help other people, then what's the use? So just something that's on my heart and a passion of mine. It's why I'm involved in several other projects too. And I know you all have interests like that too, and I think it's commendable. So two different people, Chris and Brian, asked, hey, what'd you guys do at the meetup last night? And I'll share this with you. Michael went first, and he discussed screen construction in MarketSmith, but then also scrolled through and looked at a bunch of different stocks, analyzing their chart patterns, both daily and weekly, with relative strength lines, just like we're looking at Netflix right now. Similar situation, looking at the leading groups and analyzing some of the earnings and sales numbers on the stocks. So he talked a lot about that. Then I went up there and I talked. What I always like to do is I always start with the basic foundation. I ask, hey, are there any new people here? Who are the new folks? I said, well, before we go further, you need to have a basic understanding of what CAN-SLIM is. So I went through in depth and discussed each letters in CAN-SLIM. And for those of you that don't know, the C stands for current earnings. Current earnings. And this is Bill O'Neill's methodology. And Bill O'Neill is awesome. I've had lunch with him a couple of times years ago, and I'm thankful I got to know him. The C stands for current earnings. The A stands for annual earnings growth. You don't want just a company that's got one quarter and nothing else before that. The N stands for something new. New product, new management, new services. So I discussed that with the people to explain it. The S stands for shares outstanding. Years ago, it led more to smaller companies. Today, that's changed. Money flows because of the advent of ETFs and mutual funds and hedge funds. More money flows, big money flows into bigger stocks like a Netflix or an Apple or an Amazon or Google, etc. The L stands for leader. Leaders in their field. Leading management, leading products, leading services, and price. Leading price. The I stands for institutional support in CAN-SLIM. You've got to have the institutions moving in or the stock is not going to move. And then finally, the M stands for markets. Markets. CAN-SLIM. Well, I switched it around a little bit with Mission Winners. And to me, what's the most important letter in CAN-SLIM is the M. So I've got Mission Winners. Markets. The market comes first. Market. Industry. Sector. Stock. Again, markets, industries, the sector, the stock, institutional support. O stands for outstanding, outstanding management, outstanding product, outstanding service. And then the N, and I credit this to one of my sons, never say never. The N, never say never. The mindset. So we discussed that. We looked through and I pulled up this right here, and I want to show it to you. Now, you've seen this before. This is from 40 Great Stock Market Winners. It's a daily graphs product that was produced decades ago, but it's wonderful. And here's why. It analyzes 40 stocks that made huge moves. Home Depot was in there. Mega stocks that made mega stocks that made mega moves. This is something very important. 87% of these super stocks had earnings up 30% or higher. 71% had earnings up 50% or higher. I analyzed that, and then I talked about sales growth. Earnings growth or sales growth. 0.9, more than 2/3 were a result of a move in the industry. So I stressed CAN-SLIM, industries and sectors, Mission Winners, sectors and stocks, industries, how important it is. Most of them are leaders. They had high relative strength before they made their moves. All of them had positive earnings estimates. So we discussed that. Then I stopped that and I took it a step further. And what did I do? I went in and we analyzed some stocks. We analyzed some charts and I showed them how to build a screen. And I'll show you just real quick. This is really simple. We'll make a new screen for you here right now. Look at that. Here we go. And you know what I'm going to call it? You'll like this name. How's this sound? And the reason I picked that is because today's Thursday. How about that? And we'll just put some constraints on there. Research indicates you want stocks that have a decent relative strength. I'll cut it off at A, 80. Relative strength of 80 or higher. Drops the total number in the database down to 1,536 stocks. You say, well, that's great. I guess I'll scan 1,536 stocks. No, we're not going to. You want stocks that there's institutional support. Accumulation distribution of A or B. That means the stock is being bought. And we're hitting it now. A or B. Comes out to be 431 stocks. See how we went from 7,500 down to 430? Now we're narrowing it down. Let's take it a step further. Let's go in, 1,196. Let's put this in there. Industry group. Let's look at stocks only in the leading groups. We know for a fact, and this is again the stuff I showed last night, stocks in leading groups outperform. Now we're down to 592 stocks. You can say, oh, that's pretty darn good. Now it's manageable. No, it's not. I don't want to look at 600 charts every night. That's crazy. So what do we do next? Let's go to price. We don't do low price stocks. You want to buy leaders. I'll cut it off at $12 a share. We go from 592. Instantly it takes it down. See, it's calculated to 423. We want stocks that are within 15% of 52-week highs. So I put it there at 15% of 52-week highs. We want stocks that are near highs. I said this to the IBD Meetup last night. You want to buy stocks that'll hit 52-week highs? Look for stocks near 52-week highs. Boy, ain't that original? There you go. We go down here further. Price versus 50-day. We want the stock above the 50-day moving average line. That's something important. There's where the strength is. That's not my idea. That's research from other people. Now we're down to 353. Okay? We don't do stocks that are really thin. So we'll put average daily volume on there. 50-day average daily volume right here. I'll put it at 150,000 shares a day. 150,000. That takes it, watch. Now we're down to 292. Now, we have one other variable that's important. We know that leading stocks have either great earnings or great sales. So we'll click on this, and we go here, earnings last reported quarter. Here's what we'll put. We'll put 40 in there. So this is a list that has all of these constraints and one other variable. It has earnings of 40% or higher. Now I'm down to 150 stocks. This is what I do. We want to put all of them together. So we click this tab right here. I'll drag this up here. And I'll just wait. I'll click this. And it's going to sort it by industry group rank. Here we go. So now, look at this, folks. We've got the leading stocks in the leading groups. All of these have good numbers. And then, so it's sorted by group rank first. And then I sort it by percent off high second. So that the stocks closest to 52-week highs come up first. Here we go. And then I lock it. So now I have a great list from a screen that I just made. So I showed them that, okay? I went a little bit longer than I should have, but I showed them that. And that's how we do it. And this is a great screen. It's one of the screens that I use. But then I took it a step further. And I have to share this with you. I want to show you this. I went in and I talked about Mark Minervini and his book, Trade Like a Stock Market Wizard, and his other book, his newest book, Think and Trade Like a Champion. I talked quite a bit about his book. And something that Mark Minervini points out in his book, and I've got it right here on my desk, and it's all marked up and dog-eared and everything else because it's a good book. He talks a lot about in the chapters, what do these stocks, by the way, who is this guy? Oh gosh, he won the U.S. Investing Champion a couple of times. I mean, he did it. He did it. He's the real deal. Nice guy too. And he wants to help people, which I really like. He talks a lot about trading with the trend. Chapter 6, categories, industry groups, and catalyst. Industry groups, there you go. There it is again. Finally, chapter 7, fundamentals to focus on. Fundamentals to focus on. And I think that's really important. And I wish I could show you this in the book, but I got it dog-eared and highlighted. This is in bold print in his book. Really successful companies generally report earnings increases of 30 to 40% or more during their super performance phase. This is the U.S. Investing Champion telling you what kind of stocks to look for. Companies are making some money, making good money. 30%, 40% minimums. So that's what we look for. So I discussed his book quite a bit and talked about what to look for in charts. After we had done this, you know what we did? We looked at a bunch of charts. We just sat there and we went in, and this is we just made the screen. You saw me make it, and I'll just show you real quick. I'm not going to take too much of your time, but right here. And I hope this helps you all. This is what we talked about last night. Viper Energy lifted across those tops there around 26 to 32, 20% plus on your money. Noble, downward sloping trend line, 30 to 36, kind of grinding on up. There's OAS, look at this, 9 to 12. I mean, I'm just going through these, okay? I haven't screened this. I made the screen in front of you. PDCE, Continental Resources lifting through 60. You can see it. You can always look at the numbers, all right? SRCL lifted through there. There you go. EOG, downward sloping trend line, lifted through here and marched on up. I'm not recommending these, by the way, but I just want to show you the results of a screen. That's a nice move, isn't it? Look at the volume on that. I always tell people talk with their mouths and vote with their pocketbooks. Look at those numbers. Check that out. That ain't mom and dad buying. That's sweetness. So there's a spot right here going through like $32 a share. 32 to 50. 32 to 50. What is that? That's 18 points. 18 points on 32. You made more than 50% on your money already. That's the result of this screen. That's all. Nothing fancy. Here we go. WPX going sideways. PVAC, leading group. This was a keyless stock right here, bought under 19. This stock went from right there, 1950 to 2950, 10 points on 19. That's a 50% gain. 50% on your money in 5 weeks. That's what we discussed. These are the foundations from Bill O'Neill. These are the foundations from Mark Minervini. This is what we talked about last night. This is what I do at missionwinners.com. I love teaching people on what to look for. I make a key list, I produce it, and a video every night with the buy points given to the penny. And they get a key list template every night. I go through and I teach so that people understand what to do so that eventually they can do it on their own. They can make the list and they can run with it. So is that what we talked about? That's what we talk about. And that's pretty much what we talk about every month. I gave it to you in 13, 14 minutes. Last night I talked for well over an hour, nonstop. Hard and fast facts. So I wanted to share it. I hope this helps all of you guys. And hey, Chris and Brian, thank you for asking. I wish I could have produced this sooner, but I hate doing a lot of videos when the market's open. But this is for everybody. Gentlemen, I hope it helps you all too. Thank you all very much, and I hope you have a good, safe night.